How's it going, everybody? This is going to be part 2 of our ATAS series. I'm going to be going over some trading techniques that I like to use with my 30-minute delta and volume profile footprint chart. We're going to start off by going into the settings. If you guys would like to copy my chart as close as you can, I will show you how I have this chart laid out. Then we're going to move into some actual trading techniques. Now, bear with me. Teaching a 30-minute footprint in hindsight is a little bit difficult. If you guys would like to see this more of a live example, then stop by our live stream. I talk about this every single day, Monday through Friday, when we are live streaming in the morning. But let's get into it. So starting off with my settings, I did change this chart a little bit since our first video, which is perfectly okay because the settings are pretty much the same. But here are the settings if you guys would like to copy it. Just go ahead and pause the video to grab the settings. So for the cluster settings, it's very important. We have two footprints here. We have the footprint at the top. Here's all the settings for the first one. This is the delta footprint. And then if you click this additional footprint button right here, this will give you a secondary footprint. And we are using a volume profile for that secondary footprint. And then obviously this is on a 30-minute chart. So here are all the settings for that. Okay, so let's get into the actual trading techniques that I like to use. So we talked a lot about this in my older series. If you guys watched my How to Trade Footprint series, it's a 3-part series. It's in our order flow playlist. I highly recommend watching that. I'm going to be kind of rehashing what we already talked about in that series. So I'm not going to go too in depth in this series. Just going to kind of give you guys the basics of what you need to look for on these 30-minute footprint charts. So I have a bunch of these rectangles just kind of highlighted. I'm showing you the specific examples that I would like to cover in this video. So starting off with our first example from yesterday, I believe this was yesterday. This was the 9th, excuse me. So first example here, what you want to look for. And first, let me actually go over what you're looking at here. So if you copy my settings, what you're going to be looking at from the left side of the candle, that is the delta ladder. That's going to show you how much delta is coming in on every single tick. If you guys don't know what delta is basically the aggressive traders, the market traders, the traders who are not willing to wait for the market to come to them. They want to take that liquidity right away. They want to get into that trade pretty much right then and there. So what you're looking at are the aggressive buyers and the aggressive sellers. The aggressive buyers are market trading into the ask, right? They're buying the best possible selling price, which is known as the ask. And the red orders here are people selling into the bid. They are selling the best possible price at that current level. Now, these are mostly level 1 orders. I won't get too much into that. There can sometimes be level 2 orders in the delta as well, but mostly they are level 1, meaning the best possible price on either side. So what we want to look for when we are looking at this footprint chart is we want to look for clusters. We want to look for those groups of those orders, kind of like a node. How we would look for nodes on a volume profile chart. And let me say, if you guys don't know anything about volume profile, this video is probably not going to make any sense to you. So please watch my volume profile videos because footprint is basically just volume profile on a smaller scale. Okay, with that out of the way, you look for clusters. You look for those nodes. So what do I mean by clusters of delta? Basically, what I'm referring to is you see these big orders right here, 239, 272, so on and so forth. We look for relative size, right? There's no exact number. There's no exact science. We just look for relative size. Meaning if the standard for that candle is maybe 50 contracts, maybe 100 contracts, then we want to look for those clusters that are above the average. So in this case here, if I get rid of this, You can see the average for this candle is probably about 100 or 200. So we want to look for things that are above that and kind of clustered together. And that goes for every single 30-minute candle here. We look for those clusters of those orders. Lots of buyer delta clustered together, lots of seller delta clustered together. And that will form our delta nodes. Now, don't get that confused with the volume profile. The volume profile will not show those nodes. We are only looking at the volume. We're not looking at the delta on this profile. So don't get delta and volume confused. You can, if you would like, have a delta profile. I typically don't recommend looking at delta profiles. I think delta is a lot easier to read in a ladder format like this. I like reading a volume profile. It seems to be much better. But okay, so looking at our first example here, what do we look for when we see those clusters? So when you have a 30-minute candle pushing in one direction and you have that obvious strength in that direction, right? This candle started out pretty bullish and you were pushing towards the high before it completely just nuked and sold off into the low there. But when it was pushing into the high, we saw that cluster of bullish delta. Now, it's kind of counterintuitive, right? You would think a big cluster of bullish delta on the high of a candle should be bullish, right? That means there's a lot of people buying the high of that candle. They want to push the price higher. But what you will typically see when you see those large clusters on the top of a candle or the bottom of a candle, they are grabbing liquidity. If you guys haven't watched my block trade video, go watch that. Sorry, I know I'm referencing a lot of videos here, but it's a lot of content. So if you watch my block trade video, I talk about grabbing liquidity. So sometimes you can see a very large order come in and the book will say, hey, that's a bullish order, but is it actually bullish? You don't know until you see how price reacts to that block trade. This is the same exact thing. When we see that cluster of bullish delta on the high, we don't know right away if that's actually bullish or it's just grabbing liquidity. So what we have to do is we have to keep an eye on the volume profile side of the candle. And we want to see, is it building up a support node? What I always talk about on my live stream is building value and protecting value. Those are the two most important things about volume profile trading, especially when you're breaking out of balance or trending. You want to look for building value and protecting value. And what I mean by that are these nodes. If you build value, you will build up that node. It will kind of trade in that area for a little bit, build up that node, then attempt to push away from it. So when you see these delta clusters, you want that to coincide with that volume node. You want it to go with that volume node. They need to build that value up and then protect it. And protecting it would basically be like, okay, let's see this cluster node right here. And then we want to push above it and then come back and we want to see buy pressure on that pullback. If we start to lose that cluster right away, then obviously they are not protecting that level. So you always want to watch for the protection either on the tape, the DOM, if you want to watch the 1 minute candles, whatever it is, whatever makes it easy for you, just keep an eye on price. Price needs to be protecting that level. So let's take this exact example. So what we would look for, let's say 44 is kind of where this cluster is generating most of its value. If we were to push up to 47 and then come back down to 44, you do not want to see orders trading below 44. If it trades below 44, it needs to be bought up immediately. So let's say it goes back down to 43, it needs to bounce right away. It cannot hang out below that cluster because that is when they start trapping the delta cluster. So let's say 44 is the level here. It starts to push down to 43, 42. Those buyers, that big cluster of bullish delta, they're starting to get a little scared, right? If they were opening new positions, fresh positions, they are now being threatened. The market is trapping them. So as it falls, what do they have to do? They have to sell to get out of their positions. It's called a cascading failure, right? So the buyers up here have to sell to close their positions. Then you have sellers who are selling to open positions. And that's when you see those really sharp moves down, because you have a combination of sellers. You have the sellers from people closing and the sellers from people opening. Okay, so let's not stay on this one example too much, but that's what I mean about clusters. You want to look for groups of delta that are stuck either on the high or low of candles. You can look for them in the middle of candles as well, but you really want to pay attention to the clusters when they are on the extremes of the candles. Let's go over some more examples here. So here's another good example of a bearish cluster that's being trapped. So if we look at this cluster right here, you can see there is a lot of bearish delta. Look at the delta throughout the candle. 200 here, 200 there, 10, 13, couple of smaller numbers here and there, right? But averaging probably about 200 or lower. But then look at the numbers on the low. Minus 600, minus 300, minus 600 again, then minus 4, minus 5. So relatively speaking, that is a lot of delta. And you don't have to do this in your head. The indicator does it for you. You can see it's shading these brighter because they are higher delta, right? So you don't have to sit here and look at every single number. The indicator will show you. But we see that big cluster of bearish delta on the low of that candle, and it might be a little hard to see. Let me get rid of this. But the candle is closing with a wick. So you have a cluster of bearish delta on the low, but then it closes with a wick. So they did not protect that cluster. There was no sell pressure protecting that bearish delta. If they were protecting it, they would have built up a value node where that delta cluster is, or they would have extended the tail to break below that cluster. We did not see either of those things happen. We did not see a node. You can see the volume is falling off very rapidly into that tail, and we did not see a tail below that bearish cluster. So kind of look back onto this candle here. This candle here had a lot of bearish delta right here and a lot of bearish delta right here. Yes, it did try to bounce, but eventually they sold off below that candle and put in more bearish delta. So they are protecting this candle because they broke the 30-minute low and they generated a lot of bearish delta below the original cluster. You did not see that on this candle here. So that is kind of indicative that those sellers are most likely grabbing liquidity and they are possibly trapped. So how they would really be trapped is when they stop protecting any of that bearish momentum around that cluster. Let's say that cluster right there is around 29. And I'm saying cluster instead of node because I don't want to get you guys confused. When I reference a node, I'm going to be referencing the volume profile. When I reference a cluster, I'm referring to the delta. But they're pretty much the same thing. I'm just using a different term so it doesn't confuse you. Okay, so seeing where that bearish delta is, we can look at the prior clusters to say, okay, if we start to bounce, they need to protect these levels. So the prior clusters would be this one right here, which is around 30, and then this one back here, which is around like 32. So if we start to bounce, they need to protect those levels. If they don't protect those levels, then most likely all of these clusters on the low are being trapped. So this pullback here, you can see a lot of bullish delta coming in, and it was trying to protect that bearish delta. You can see there's a nasty wick there, and it was staying below that 32 price, 33, 32. But then if we zoom out, you can see they quickly stop protecting those clusters. So this happened the next trading day, but let's pretend it was the same day. If it was the same day, once it started to break above those 30-minute highs, those 30-minute clusters, all of that delta on the low is now trapped and they can be squeezed out. So how you look for squeezes is when you are pushing away from that level, keep an eye on the other side of the delta. So in this case, there was a lot of bearish delta here. So as we're pushing up, look for those very large clusters of bullish delta because that will typically imply that those bearish traders are being squeezed out. Okay, let's see some more examples here. I got quite a few examples. Okay, here's a couple more examples. I believe this was actually from today. Yeah, these were from today. So a couple of examples here for, once again, seeing those clusters on the high and low of the candle. And we didn't see a whole lot of protection. I'll show you what protection looks like because the end of today had a lot of protection on those clusters. So on the push up here, you can see a large delta node on the high there, 800, 300, 500, 500, just a ton of delta on that high. And they actually did build up a decent volume node there. But if I get rid of this, let me close this here, you can see this candle closed with a very very long top wick. So they did not protect that delta whatsoever. They put in a lot of bullish delta on the high, then the 30-minute candle closed very weak, giving you that long top wick. So then you started to sell off quite a bit. Kind of what I was saying earlier. You had a lot of trapped bullish delta, then you see a big spike in bearish delta on the lows here. So once again, look at this candle. We had this cluster of bearish delta, looked pretty weak. You can see the tail on the volume profile is falling off quite a bit. When you see a large delta cluster that is side by side with a very weak tail like this, you can see the tail on the volume profile falling off rapidly. That typically means that that delta cluster is grabbing liquidity. It is not maintaining that value. The only exception to that is if the move is very wide. If it's one of those trending candles, right? Trending candles, kind of like this one right here, you can have a lot of delta throughout that entire candle and it won't build up a node because it just kept buying and kept buying and kept buying and kept pushing higher, right? But if you're not seeing that on the candle, if you're seeing the candle has a pretty standard body, kind of like a D-shaped body, and then it has a tail that falls off in volume, you don't want to see that. You don't want to see a large delta cluster with a tail that's falling off like that. This candle right here, that would be considered an initiative candle, a trending candle, because look at how strong that candle is. You started the candle bearishly. You opened up down here. You had bearish delta on the low. You wicked the bearish delta. And then look at the body of that candle. Very strong body candle. As you're pushing up, the delta is very one-sided. You're seeing bullish delta pretty much the entire way up. It's okay if the tail is thin when it's doing that, because that's basically telling you that the buyers are so aggressive, they were not giving the sellers an opportunity to generate value, right? They were just blowing through those levels and looking for higher prices. So it's okay to see a weak node, a weak tail during an initiative candle like that. But okay, so you had bearish delta stuck on the low, and then you completely trapped it on the same candle. Let's take a look at what it looks like when you are protecting this delta. So look at this candle here. So this candle here, once again, very bullish throughout the entire candle. It starts to fall off a little bit on the high. You can see the delta and the volume pretty much giving up on that high. So during this 30-minute candle, that was during like the London close going into lunchtime. Pretty typical to see a fall off in volume there. It was kind of struggling on that high. So what happened was it kind of closed near its node, right? It closed right around its POC node for the candle, right around that delta cluster. And then on the open of the next candle, look at the seller delta. There basically isn't any seller delta here. There is no seller delta. You have that one little node there, 252 contracts. That is it. They tried to sell this bullish cluster here and got completely faded. And then it just completely pushed higher. You did have a couple of little clusters here for the bears as you were rising. They had a really big node right here. They had a big node there, big node there. That is most likely just profit taking, right? You had a really big move up here, pretty aggressive move pretty quickly. So that's most likely just profit taking. It's not being protected. You're not seeing any crazy candlestick patterns that are telling you that it's bearish, anything like that. So as long as you see bullish clusters that are kind of overlapping or just invalidating that bearish cluster, it's completely fine. So you had a bearish cluster here, but then right after it, look at those bullish contracts coming in. They did not care whatsoever about that bearish delta. Okay, let's move on a little bit. Let me show you a few examples here of what you want to look for when you are following a trend. Thank God today was so good to us. We had a lot of good examples from today's candles. But yeah, look at this here. So at 1 p.m. today, I think that's 1 p.m., we had a bearish delta cluster pull back into a previous bullish delta cluster. So look at this really big bullish node right here. Almost 800 contracts, almost 500, almost 400, just a lot of delta. And it coincides with a lot of value as well. There's a really big volume node there. That's actually the POC, this little rectangle right there. That's telling you where the POC is. So the POC of the candle goes hand in hand with that bullish delta. So they are definitely protecting that level. So on the next candle, if you start to see a lot of sell pressure, that's not really a big deal unless they start to break that delta cluster. So if they started to see a lot of sell pressure below 64 here, that would have been a little bit worrying because they would have been breaking this bullish cluster, right? That bullish node. But look at what happens. Let me go ahead and delete this so you can see it. So you can see here, the tail begins to fall off rapidly. So you tried to push down, you generated a pretty decent bearish delta node, but then you wicked. That wick is a beautiful example of what I mean by protecting clusters, protecting nodes. You want to see price rejection. So when it hits that important level, price should be rejecting that level and bouncing away from it. That is exactly what happens here. You have that bearish delta being absorbed into that node. If you guys don't know what I mean by absorbed, think about a brick wall, right? And you're just punching it and punching it and punching it and punching it. It's just absorbing your punches, right? Your punches are not strong enough to get through that brick wall, right? So what's happening here are these sellers are running into a brick wall, right? Constantly just hitting that wall, hitting that wall. There's not actually a wall there, but just you get what I'm saying. So they're hitting that level, bounces. They're protecting the wall. They are not strong enough to get through that wall. So the bulls are protecting it. It goes higher. Let's look at another example here. So here's another example of a nice trending move being protected. And this is another example for the buyers getting kind of weak, but they're still maintaining their trend. So what I mean by weak is look at the highs of these candles here. They're not really building up significant nodes. You can see the POC of their candles are pretty much towards the middle of the candle. This candle here even has a very long top wick. So we're seeing weakness, at least right here. Obviously, in hindsight, wasn't very weak. But right here, there's a little bit of weakness. We're seeing the wicks. We're seeing the volume falling off. The delta nodes, the volume nodes are towards the middle of the candle. So it's weakening. It's not completely bearish. It just means the buyers are slowing down a little bit. So what we want to look for in that instance is where is our value, right? So in this case here, our value would be this major node right there, because that is where there's a lot of bullish delta and we know that they are protecting that delta. So when you start to see weakness on these candles, you don't care. Who cares, right? If it's not giving up this node, it does not matter. They are protecting that node. That is kind of their line in the sand. And as long as that node is continuously protected, this sell pressure means absolutely nothing. It could mean profit taking, but it's not showing a complete shift into a bearish trend, right? So as long as that node is protected, they're perfectly fine. So looking at how we pulled back here, you can see once again, there's another bearish delta cluster right there. But once again, look at the volume profile. This is why we want to have them side by side. They're not really generating a lot of value on those lows. If they would have generated a pretty big node down here, if you guys watch my volume profile videos, think about a lowercase b. A lowercase b is very bottom heavy. They put in a lot of value right on the low of that candle, right on the low of that day, whatever it is. And as it pushes up, they sell those bounces, right? We're not seeing that here. We're not seeing lowercase b's. We're not seeing these bounces get dramatically sold. There's not a lot of bearish delta on these highs. You still have the bullish delta that is kind of grabbing liquidity. So that bearish delta right there is not showing a trend shift. It's scaring people for sure. Definitely a lot of sell pressure, especially on the low, but it's not strong enough to break the trend. And this is where just standard candlesticks help you out as well. Keep an eye on these 30-minute lows. Look at that. 30-minute lows just constantly being protected. So we don't even really need to use crazy fancy analysis here, because the 30-minute lows are just being protected. So we have that bearish delta coming in close to that previous 30-minute low. They are not allowing them to generate value below that 30-minute low. Okay? All right, let's take a look at a few more examples and then we'll call it there. Okay, so another example here is, once again, look at this candle. Generating a lot of bearish delta, but is it breaking anything? Look at the previous candles. Look at where the major bullish clusters are. Think about those levels being your support nodes. Is that bearish cluster threatening any of those bullish nodes? In this example here, no, it is not. So we could take a look at this cluster right here. There's a lot of bullish delta kind of right there. And then a lot of bullish delta, pretty much the same level, kind of like in this general area right there as well. So we see this bearish delta coming in. It's not even ticking below those bullish nodes. Who cares? Who cares about that bearish delta? They're not threatening anything. They're not even threatening the candlestick lows. So price action traders are not even scared here because the delta is not even breaking the 30-minute low. Okay. That's why you want to tie all these together. 30-minute candles, 30-minute volume profile, 30-minute delta profile, right? They all go together. Okay, so looking at this breakout, this is what I was talking about earlier when I said that if the candle is very initiative, if it's one of those trending candles, it does not need to slow down and generate a bunch of nodes along the way. It basically just shows you that they are completely wiping out the sellers, right? They are cascading the sellers. So you can see a ton of buy pressure throughout this entire candle. 2,700 right there. Huge, huge node. Big node right here. It doesn't really show you because these nodes are so big. The coloring is based on relative size. So this node right here is actually pretty big, but relatively speaking in this candle, it's not super big. But there's a big bullish node just above that bearish node right there. A little bit of bearish orders coming in, but once again, you always ask yourself, is it breaking anything? Is it threatening anything? I think a lot of people, especially when they're scalping, they get really scared when they see a lot of orders come through and they see those big orders come through. But you always just got to take a step back, take a deep breath, ask yourself, what is it breaking? What is it threatening? Is it threatening my position? And if the answer is no, then who cares, right? Let your position go. Okay, so right here we have that bullish cluster, a little bit of bearish delta above it. Who cares? Not breaking anything. It continues up, and then you have a ton of bullish delta into the close. This is not a great candle to use as an example because delta gets very finicky on that closing 15 to 30 minutes. As you can see here, there's just so much delta coming in into that high. But yeah, I just wanted to show you guys that during these initiative candles, they can make their volume profile look really wonky, kind of like this. And that doesn't really mean a whole lot. It doesn't make it extremely weak. You still have to watch those clusters and see if it's actually breaking anything. What a candle like this would show you is, if you guys are familiar with single print trading, we talk about that in our market profile video, it would be most likely generating single prints. It'd be generating kind of an area of price rejection that might want to be retested. But I'm not going to go into that in this video because we talk about that in all of our volume profile and market profile videos. But yeah, that's basically it, guys. That's basically how I use this 30-minute footprint. Long story short, look for those clusters, look for those nodes. If you see a lot of delta on the extremes of the candles, the high of the candle, the low of the candle, you always want to check if it's being trapped. We talked about that earlier in the video, but basically if it is being trapped, as it moves away from that cluster, you want to watch out for those potential squeezes. So let's just take this for a small example for a squeeze. Let's say all this bullish delta came in on that high, started to push away from it, then we saw a lot of bearish delta come in. So maybe that could start a squeeze, right? I'm just using this as a small example. That's not exactly what they look like, but you get what I'm saying. So as there is a lot of delta stuck in one direction, as it pushes away from that direction, you could trap and squeeze those traders. But all right, guys, I hope you guys enjoyed this video. If you guys would like to sign up to ATAS, we have a promotion going on. The code is DejaBrew5, the number 5, all one word, will get you a discount on ATAS. If you guys would like to try them out for free before signing up, sign up to their free platform using the first link in the description. Send me an email and I will get you guys a 30-day free trial. But all right, everybody, I appreciate you being here. I'll see you in part 3. Peace out.